Welcome to the XUCPA channel. My name is Charlene. I'm a CPA. I am also a certified tax coach. Today, I want to talk to you about the topic of IRS audit. So please stay tuned. So I think most business owners are aware, if you pay attention to the news, in 2023, through Inflation Reduction Act, the IRS received 78.9 billion funding. Now, after that, some of these funds were reduced. However, there's still significant amount of funding they are receiving, totaling $54 billion. Now, because of that, the risk of an IRS audit is likely to increase in the next few years. Now, there are few facts that I would like to share with you before we go into the details. First is increased funding for enforcement. Now, with the 54 billion, the IRS receives significant funding from Inflation Reduction Act, with a portion specifically earmarked for enforcement activities. In this case, IRS audit. While some of this funding has been reduced, there are still billions allocated to increase IRS capacity to audit and investigate tax evasion. The second thing that you need to be aware of is, now these audits, IRS is going to focus on high income earners. So what is their definition of high income earners? They are referring to anyone making 400,000 and above. So if you fall into that category, you need to pay attention to how you claim your deductions in the next few years. Now, the third thing is staff increase. Obviously, with the additional funding, there's going to be more auditors being hired by the IRS. So their capacity to expand, the audit activities obviously will increase. With that, I want to talk to you about some of the common areas that IRS typically pay attention to in an IRS audit. The most common area of audit is three areas: travel, meals, auto expenses. So let's talk about auto deductions. You go to an accountant to file your Schedule C, and an accountant asks you how many miles have you driven, and you tell them 20,000 miles. And then they put in 20,000 miles, and then you get an IRS letter asking you for a mileage log, and you wonder why. A mileage log is necessary to prove the intent, of all these trips. So let's say if you drive, on a specific day, say Monday, you drive from location A to B, you do have to specify why did you travel to that location, who did you meet with? Did you meet with a customer, a client, or a supplier or prospective client? When did you meet? Why did you meet? And a description of, the meeting. What is it for? So in the case of, when you claim actual expenses, let's say you claim, your gas, your actual gas, your repairs, your maintenance, your auto insurance, your tolls, your parkings. In those scenarios, do you need to maintain a mileage log? The answer is yes. Just because you pay, say, a couple $1,000s for gas does not mean that all of it is considered business. So how do you prove that it is in fact expenses for business purpose? You prove it by maintaining a mileage log. Now let's talk about meals. A lot of people ask us, do I keep receipts? The answer is, if you spend $75 and above, you need to keep receipt. Merely just charging it to your business credit card is not sufficient. However, for every single meal that you have that is deemed as a business deduction, you do need to have a meal log. So what do you need to put in your meal log? The who, what, when, why, where. If you're gonna dine at a restaurant, what restaurant, what's the location, who did you eat with? Is it a customer? Is it a supplier? Why did you eat? What's the purpose? Is it for business? Is it for personal? If it's for personal, it will be disallowed, and a brief description of the meeting. Now, if it is for travel, it's the same thing. You take a flight, you go from A to B. So the location, where is it? Like, why did you have the business trip? What is it for? A description of the business trip. How many days did you go? And the relationship. Did you meet with a customer, a supplier? And what are you trying to get out of the meeting? So that is a travel log. So to claim all these deductions, as a business owner, it is mandatory that you maintain a travel, a meal, a mileage log. Now here is a little bit of problem in my opinion. See, our system does not mandate any business owner to submit all this documentation. So it's a trust system. The IRS says that you guys need to maintain all this log, but we're not gonna need you to submit this log to us. You need to maintain it and we trust. So it's a trust system. If you can't have the log, if you fail to prove that this is for business intent in an IRS audit, it will be disallowed. One thing I want to stress on is just because you get audited by the IRS does not mean you commit a crime. Sometimes an IRS audit is really just a random audit. One other thing that I would like to talk about is that I recently launched my book. It is How to Grow Your Wealth Through Tax Planning. We're currently having a giveaway, so if you feel like you would like to get a free copy of the book, just be the first person to contact us to schedule an intro meeting with us. Then you will not only get to talk to us, talk to me, you will also get a free copy of the book from us. So hopefully you learned something in this video. If you know a business owner who is currently undergoing an audit, or you feel like more business owners should watch this video, please share this video with them. Thank you so much for watching. We always would appreciate it if you could like, share, subscribe, hit the bell notification. Then my marketing team will very much appreciate it. We put in so much efforts into developing this content so that we hope more business owners will watch and follow this channel and benefit from the latest, greatest tax and accounting tips. We will see you in the next video. Goodbye.